Hunter investors represent a distinct philosophy within the world of finance. They are not defined by speed, volume, or constant activity but by patience, perception, and restraint. Their approach to markets resembles the mindset of a hunter in nature who studies the environment, observes patterns, and waits for the precise moment when action carries the highest probability of success. This philosophy has existed as long as trade itself and continues to shape the behavior of a small but influential group of investors across the globe. In financial markets, most participants behave reactively. They respond to price movements, news headlines, social influence, and emotional pressure. Hunter investors operate differently. They seek to understand underlying value, long-term cycles, and human behavior rather than surface-level signals. Their advantage does not come from superior access to information but from superior interpretation and discipline. The concept of hunter investing begins with the idea of scarcity. In nature, resources are limited and survival depends on timing and efficiency. Early merchants and traders learned that profit emerged not from constant exchange but from recognizing moments of imbalance between supply and demand. These early hunter investors waited for shifts caused by weather, political change, or social movement. When conditions aligned, they acted decisively and accepted risk only when reward justified it. As financial systems developed, hunter investors evolved alongside them. In early stock markets, many participants speculated based on rumor and emotion. A minority focused instead on fundamentals such as earnings, assets, and economic conditions. These individuals often endured long periods of inactivity and public skepticism. Yet their long-term results frequently surpassed those of more active traders. A defining trait of hunter investors is their relationship with time. They view time not as a constraint but as a strategic asset. While others measure success in daily or weekly performance, hunter investors think in years and sometimes decades. They understand that markets reward patience unevenly but powerfully. A single well-timed decision can outweigh hundreds of impulsive actions. This patience is not passive. Hunter investors are constantly engaged mentally. They read financial statements, study macroeconomic indicators, analyze industry structure, and observe investor psychology. Their research is deep and continuous. The difference lies in execution. They do not act until multiple conditions align. When they do act, they commit with confidence. Hunter investors also maintain a unique relationship with uncertainty. They accept that certainty does not exist in markets. Rather than seeking prediction, they seek probability. They evaluate scenarios based on likelihood and potential outcome. This probabilistic thinking reduces emotional stress and improves decision quality. Losses are anticipated as part of the process and are managed through preparation rather than reaction. Risk management is central to hunter investing. Capital preservation is prioritized above profit. Hunter investors recognize that survival enables opportunity while loss limits future potential. They size positions conservatively, diversify intentionally, and avoid excessive leverage. They understand that large losses are often the result of overconfidence rather than bad luck. Emotion plays a critical role in financial outcomes. Hunter investors develop emotional discipline through experience, reflection, and structure. They do not chase rising prices or panic during declines. Instead, they ask whether changes in price reflect changes in value. If not, they remain inactive. This emotional detachment is difficult to maintain but essential to long-term success. Contrarian behavior is often associated with hunter investors, but it is frequently misunderstood. They do not oppose consensus simply to be different. They oppose consensus when it becomes extreme and therefore fragile. When optimism dominates and risk is ignored, they become cautious. When fear dominates and value is overlooked, they become interested. This positioning requires courage and conviction. Global examples of hunter investors can be found across different cultures and economic systems. In developed markets, they often focus on valuation cycles, monetary policy, and demographic trends. In emerging markets, they pay close attention to political stability, currency risk, and capital flows. Their adaptability allows them to operate effectively in diverse environments. In Asian markets, hunter investors often emphasize patience and long-term relationships. Cultural traditions that value restraint and continuity align naturally with hunter investing principles. In European markets, historical awareness and cyclical thinking play a significant role. In American markets, hunter investors often operate quietly alongside more visible speculative activity. One challenge hunter investors face is psychological isolation. Their approach often conflicts with prevailing narratives. During periods of market enthusiasm they may appear inactive or overly cautious. During downturns they may act while others retreat. This isolation can create doubt and discomfort. Those who succeed learn to trust their process rather than external validation. Information overload is a modern obstacle for all investors. Hunter investors respond by filtering aggressively. They consume less but think more. They avoid constant media exposure and focus on primary sources such as financial reports and economic data. By reducing noise they improve clarity. Technological advancement has changed market dynamics but not human behavior. Algorithms execute trades faster than ever, yet fear and greed remain constant. Hunter investors understand that technology amplifies emotional extremes. This amplification creates opportunity for those who remain calm and prepared. Learning is continuous for hunter investors. They study history because markets repeat behavioral patterns. They analyze past crises, bubbles and recoveries to understand how fear and optimism distort perception. They also study psychology to better understand their own biases. Self-awareness is a competitive advantage. Mistakes are inevitable. Hunter investors respond to mistakes with analysis rather than emotion. They review decisions objectively and adjust their frameworks accordingly. This learning process strengthens future performance. Avoiding repeated mistakes is more important than avoiding mistakes entirely. Another important aspect of hunter investing is simplicity. They prefer understandable businesses and clear economic drivers. Complexity increases uncertainty and reduces margin of safety. By focusing on simplicity they reduce the risk of hidden flaws. Capital allocation decisions are made carefully. Hunter investors compare opportunities across asset classes, geographies and time horizons. They choose the option with the most favorable balance of risk and reward rather than the most exciting narrative. Liquidity is also considered. Hunter investors ensure they can exit positions without excessive cost. Illiquid assets may offer higher potential returns but also carry higher risk. Balance is key. Ethics and responsibility play a subtle role. Many hunter investors recognize that long-term success is tied to sustainable practices and sound governance. They avoid businesses that rely on deception or exploitation because such models often fail over time. Wealth for hunter investors is a byproduct, not a goal. Their motivation often centers on mastery, independence and understanding. Financial success provides freedom rather than status. This perspective reduces pressure and improves decision-making. In times of crisis, hunter investors become most visible through action. When markets collapse and fear dominates, they deploy capital cautiously but decisively. Their preparation allows them to act when others cannot. These moments often define long-term performance. After opportunity passes, hunter investors return to observation. They do not force activity. They understand that markets offer opportunity intermittently, not continuously. Waiting is part of the strategy. The future of hunter investing remains relevant despite changing technology and market structure. As long as human emotion influences prices, there will be opportunities for those who can observe patiently and act rationally. In summary, hunter investors embody a disciplined, thoughtful, and resilient approach to finance. They operate quietly, focus deeply, and act selectively. Their success is built on patience, preparation, and perspective. In a world driven by speed and noise, they remain deliberate and calm. Their path is not easy, but it is enduring.